Hello, I'm Haida Malik and welcome to the Mehmi Financial Group podcast. Today's topic is Montreal used versus new trucks, financing strategies for fleet expansion. Whether you're adding late model rigs or brand new tractors for Quebec's demanding routes, choosing the right equipment and financing mix will shape your cash flow, total cost of ownership, and growth trajectory. First, let's weigh used versus new. A 1 year old sleeper tractor often trades at 60-70% of its original MSRP, yet still carries most manufacturer warranties. You save upfront but may face higher maintenance and shorter residual horizons. A new truck commands full factory support, custom specs, and maximum resale value retention, but costs 25 to 40% more initially. Now, how do you finance each path for used trucks? Equipment term loans and accelerated depreciable leases work best. A 3 to 5 year loan at prime plus 1% lets you own an asset you plan to run 10 plus years, capturing full capital cost allowance. Alternatively, a 36-month finance lease spreads cost into manageable rentals, keeps little to no down payment, and treats the asset on balance while still preserving tax write offs. For buy new trucks, captive operating leases and deferred payment programs shine. A 48-month operating lease at prime plus 0.75% converts a $200,000 capex into $3,000, $4,000 monthly rentals off your balance sheet under ASPE/IFRS. Many OEM arms, Volvo Financial Services, Packcar Financial, bundle preventive maintenance, telematics, and roadside assistance into that rental, simplifying budgeting and capping downtime risk. Deferred payment promos let you take delivery now and defer your first payment 90 to 180 days, aligning outflows with spring freight peaks or Q4 revenue. Here are the key negotiation levers. 1. Advance and residuals. For used loans and leases, aim for 60-70% advance rates and realistic 20 to 30% residuals at 36 months based on local auction data. For new operating leases, lock in 55 to 65% residual guarantees to lower rentals and maximize trade-in equity. 2. Money factor and spreads. Target effective APRs near prime plus 1% on term loans and finance leases. For captive promos, push for the lowest money factor equivalent to prime plus 0.75%, timing orders around quarter-end incentives. 3. Deferred payments and deferrals. Negotiate 90 to 180 days of payment holidays on new units to match seasonal cash inflows. On used deals, secure a 30 to 60 day first payment deferral if you need rapid delivery but haven't yet monetized trade-ins. 4. Maintenance and uptime. Bundle preventive maintenance on both new and late model used units or layer your existing dealer service contracts into the lease. Ask for guaranteed uptime clauses like replacement units within 24 hours of a breakdown. Operational best practices. Conduct pre-delivery inspections on used purchases to verify condition, avoid hidden repair bills. Maintain detailed service logs, engine hours, component replacements to support warranty claims and strengthen your next appraisal. Standardize on 2 or 3 chassis and sleeper configurations to simplify parts, stocking, technician training, and residual forecasting. 3 action steps to kick off your expansion. 1. Define your mix. List the number of new versus used units you need, noting specs, age thresholds, and mileage targets. 2. Gather quotes. Solicit term loan offers and finance lease schedules for used units from 2 banks and an independent lessor. Get operating lease proposals and deferred payment term sheets for new rigs from your OEM dealers. 3. Model your cash flows. Build a 60-month comparison of loans versus leases versus operating rentals. Include down payments, deferred starts, tax shields, maintenance costs, and residual values to pick the lowest net present cost solution for each category. By aligning your fleet mix with the right financing, balancing the lower capex of used units against the service guarantees of new rigs. You'll grow your Montreal operations strategically, preserve cash for operations, and position your trucks for maximum uptime and resale value. I'm Haider Malik. Thanks for listening to the Mehmi Financial Group podcast. Drive safe and finance smart.